Hello. Welcome back to Trading Triangle. It's just me and Kaye once again. How are you doing, Kaye?
I'm doing great, man. How are you doing? This happy Sunday. I know we are starting a little bit early,
We are.
and we know the reason why we're starting a bit early.
There's a
And you
good
can
reason
probably
for that.
share that with the group here.
It's England versus Spain, which is it's a tough call in this household. My wife is Spanish, so yeah, it's gonna be a tough night. But hopefully a successful one for obviously England. You can notice that in my voice. So yeah, it's got to be a tough one. Awesome. So we are obviously just a couple of guys on the internet looking at the charts. So this is not financial advice, just a bit of fun. We like to do this every Sunday. Obviously, Kay mentioned it was a bit earlier this week, but we'll be back at 6 p.m. UK time next week, which I believe is 1 p.m. your time. Is that right?
Exactly, 1 p.m. Eastern
Awesome.
my time, and yeah. So next week we'll be back to our original time, but for today, let's get this rolling.
Absolutely. And with that, we will jump into the charts. Oh, no. What have I done here? Hold on, I need to present it. That's what we're doing. Still getting used to it, Kay.
No worries, no
Nate
worries.
does
We
it
have
so
all
much
the time in the world.
better. Nate does it so much better, doesn't he?
He
So we'll
does. He
start
does.
off with the market overview for last week. It's a bit of a mixed week, actually. You can kind of see that on the screen now. You've got reds, greens, obviously to be expected, but nothing too mad, was it? Nothing expansive. No big numbers. What would you think there, Kay?
I think there was just that news of Tesla postponing their 8/8 event. So
Oh
we
yeah,
saw that massive drop after the news came out. But then on Friday, the stock recovered. Pretty much, I think QQQ had a little flat week, and that's what you're seeing over here. I think the small caps did pretty well. And apart from that, I think the earnings season is picking up. So we'll touch upon that a little bit later in the slide. But that's pretty much it, what's going on here.
yeah. Not nothing too much to report. Just a few kind of names kind of floating around, isn't there? But next week might be a little bit more interesting. We'll see. So we'll move on to the fear and greed index. Obviously, we are just in greed. We've been sitting in neutral for quite some time. I think we've actually mentioned it the last kind of few sessions, and we've just peaked into greed. Do you see it kind of going a bit higher than this, or do you see a little bit of a pullback, maybe back into neutral? What do you think people's mindsets are at the moment?
Well, honestly, we have seen times when we have actually gone to extreme greed. So in
Mm.
the stage between neutral and greed, I think we have still more upside potential to run. And with the CPI numbers cooling down, we are noticing that there is a lot more calls to have rate cuts coming in starting September. So that's another interesting observation that we are seeing. So we'll see how that plays out. But I wouldn't be surprised if we actually move from greed to extreme greed. I don't see any reasons for going back into fear at the current point in time.
Yeah, I'm gonna see that in the charts in a second. We're doing SPY and IWM this week. We're not doing QQQ just because there's been a bit of a move in IWM, which I think has a few more talking points to it. Quite often when we bring up SPY and QQQ, they kind of align with each other, and we often say the same sort of thing. But before we jump into the next slide, obviously, I just want to say thank you to Wolf for letting us use his platform. Probably should have started with that earlier, but I'm putting it in now. And obviously, make sure you put your audience request in for later on when we actually just go through the charts for you guys. Obviously, after our individual picks, of course. Just running over the things on the left there, we've got the put to call at 0.62, got the VIX at 1246, which is still pretty low, but it could always go lower, can't it, Kay? So, yeah, so we've got SPY and QQQ kind of flattish in a way. I know SPY
Yep.
is a bit further up. The diamonds up a percent, IWM a massive 5%, and obviously Bitcoin as well, 6%. The two events we've got this week is on the 15th, which I'm not too sure what day that is. Tomorrow? Yeah, tomorrow.
Which is
Powell
tomorrow,
speaks.
yeah, Monday. Yep.
Powell speaks, and the market moves on that. We all know that happens, so it'd be interesting to see what happens there. And we've got jobless numbers as well on the Thursday, so plenty to look out for. And with that, we'll jump into the next slide, shall we?
Do that. Yep.
Earnings. I'll let you take it away.
Well, it's going to be a pretty busy week. I think we are starting to kick off into the earnings. We had few banks last week reporting. Now we kick it off with banks here. We also have, interestingly, we have a couple semiconductors here going on, and we have Netflix reporting. So I'm definitely going to be watching these, especially TSMC and Netflix. We end the week with American Express and SLB. Anything that pops up in your radar,
No,
Sean?
not really. I mean, Netflix is one that I'm going to be watching. I'll stream the actual earnings call on my channel as well. So, be interesting to see what I've got to say because I know the last one they were talking about the adverts, etc. So, see how the kind of the adverts have actually performed, because basically since then they've actually implemented ads. So I wonder if they've actually got any additional revenue on that side of things. But yeah, nothing else really jumps on the page for me personally. So yeah, I think the week after that's going to be a bit more interesting, isn't it?
Exactly. I think
Yeah,
with the tech roaring in starting next week, I think Netflix is going to give us a long a window into how the tech is going to perform, and it's going to be very interesting to see how the tech performs in the next 2 weeks or so.
absolutely. So this is the SPY.
Hmm.
We can see a little bit of a topping candle on Friday, which means the sellers kind of came in towards the end of the day and pushed it back down. And that's not really what I like to see, but again, it's above the trend line, it's above the 20 moving average, it's above the 50 moving average, of course, and it's above any kind of major kind of resistance support line. So as it stands, it's still kind of, the trend is your friend, and will may it continue. Now, what I've drawn here is the kind of yellow line, just a potential if it breaks it. We've got a potential, what's that, 9% on the screen there, just under 9%, all the way back down to that gap fill, the second gap fill down to 505. A bit more of a dramatic one, but you never know. That's the only thing I can really see as a potential trade on this chart. Obviously, if you're already in it, just keep dollar cost averaging, etc. And I'll let you chime in with a few more thoughts if you have them for the SPY.
Yeah. Yeah, no, absolutely. So I think from just from another point standpoint, the S&P 500 put to call ratio for expiration next week is 3.74. So a lot more put options here as opposed to call options, which are
Mm.
expiring next week. With that said, trend is your friend. I think at this point in time, I'm not taking any trades on SPY. I'm just waiting and watching, unless you're doing day trading where you're getting in and out on the
Yeah.
same day itself. But for swing trading or even a scalping, probably you can do scalping on this one, but I don't have the time to do scalping. I think there are other channels who do much better in scalping from S&P 500.
Mm.
Same thing with QQQ. I think unless we see some kind of a trend established, right now the trend is upwards, and it's just dollar cost average for me at this point in time.
We've said it plenty of times on here. The trend is your friend. So yeah, with that, we'll move on to something different, which is the IWM. And we can see a potential breakout. So what I've drawn here on the page is that's the wolf sign is right in front of the percentage. So that is actually 6.3% up to that gold line. But quite simply, maybe a retracement back down to this 210 line, and then maybe power high to that kind of 224 level, which is the yellow line at the top. Very, very simple breakout strategy. We can kind of see the topping candle that kind of produced itself on Friday. Again, that's where the price has kind of gone up and then been pushed down throughout the day. And we might see it retrace to 210 kind of beginning parts of next week, perhaps, and then obviously a move higher after that. Are you looking at this one, Kaye?
I am actually, and interestingly, the put to call ratio for the Friday that expired on 7/12 was 0.68. So it was already very bullish. But as we go into 7/19, we start seeing the numbers creep up to 1.80 with almost 1.1 million, 1.1 million put options versus only 656K call options. So you see a lot more bearish. And I think it is because of this gap fill, sorry, with this gap up. So I wouldn't be surprised if we actually pull back and fill those gaps on the index, because we did see a pretty big bump up in the last week for the small caps. But it is also in accordance with how folks are predicting that the S&P 500 has a much higher price target for the end of the year, and that cannot run without the support of these other companies, whether they are in the mid cap or the small cap. You need the whole market to participate, because the max 7 has already been pushing the market higher. Not saying that they can't push the market higher further, but you need support from other supporting cast as well.
Yeah, I mean, you mentioned the Max 7 not be able to push the market further, but we've got earnings just around the corner, so they can always just do that, can't they? And again, with the mid caps and small caps, they can also push up as well. So it'd be interesting to watch RWM over the next kind of month or two, I guess. Everyone's calling for a small cap summer, and I'd be up for that. I'm sure you
Yeah,
would.
and we also have a couple folks on the chat. Matthew says Trump stock will rally, and then Stoics of the Land says long DJT.
Yeah,
So I think they are definitely referring to the stocks that Donald Trump has that, and with the latest assassination attempt on Donald Trump, is definitely going to, I guess, give a little bit more boost to those stocks.
I think so. Yeah, it'd be interesting to watch that ticker this week as well, especially tomorrow morning, I think.
Yeah.
Right, let's move on to my first chart, which is Alphabet, obviously Google. I've gone for GOOG. Sometimes I go for GOOGL. I know sometimes you go the GL route, but I don't think it really makes much of a difference.
No, it's a Class A versus Class C share.
Yeah,
I mean, if you're investing for a long term, and if you're buying it for the first time, I would just say just go with the L, with the Class A share. But if you already have C, then just keep buying C. It's not a big deal.
yeah, not a big deal. They both move exactly the same, so it's not really an issue, is it really? So really, quite simple. It's approaching that kind of old resistance point. So I've used a little cursor here of the 187.50 line. That's a previous resistance here, a couple of weeks back now, and we're just approaching that now. And on Friday, had a bit of a down day, potential bounce off of this kind of trend line and this previous resistance. But the level I'm actually looking forward to more is this yellow line, which is the 183 level. I know it's just below the 20 moving average, but sometimes the 20 moving average can be broken a bit more viciously. You can see it down here with the candle coming quite a lot lower again here as well. So it doesn't always bounce off of that perfectly. Sometimes it comes down just below it, and then obviously it bounces up and moves on. Coupled with that, obviously you do have the kind of support level around here as well, which we have seen a good amount of price action in terms of the positive way pushing up from that level. So 183 is a level for me. And then obviously stop loss would be somewhere down here potentially. And if you're not really into 183, then you could actually go for 180. Which one would you be your favorite here, Kay, or would you not
I,
look at these levels at all?
no, I think 183, that one I'm looking at as well. Uh, and there is a gap, but that's down at 160 to 162. You see that gap over there, but I don't see that gap fill anytime soon unless we see a big market correction, because that's going to be a big drop. But if you are doing a short term trading, I think the 183 level, would be that. Yeah, that's the level that I will definitely look for a bounce off, which also, if you look at it, also kind of aligns with the 20-day moving average, of which is
Yeah,
182.97. And generally, if we see a bounce from there, we would probably be able to grab that profit. And that could also help with the options. If you are looking for a weekly option at 182.5, you get a dollar 16 per stock, which is not bad actually for an investment of 18,200.
yeah, interesting. I mean, this trend line as well is not perfect. It could always be brought down a little bit lower, depending. It was drawn back since I think February of this year, so it's not. It's not perfect. So that could always be an extra point of confidence down at these levels as well, perhaps depending how you draw your trend lines. So plenty to look out for Google. I think it's it's one of the biggest stocks in the world. It's doing pretty good things around AI as well, and I think it's a bit more understated. We had a bit of a comment on that yesterday, didn't we? Uh,
Yes.
about how it's a bit more of an undervalued play, but we'll see how it plays out.
And what I just want to add is just be careful, because they report earnings on 7/23. So
Mm.
we could see, we have actually 35 up revisions on Google. So we will cover Google again next week. Either Sean or I will cover Google as well. But considering that their revenue and their EPS, they're probably going to beat. And if we see more news around the AI, on how Google is actually improving on the AI front, I think we may see another breakout on Google after the earnings, or right after they report earnings.
Yeah, looking forward to that. Hopefully that happens. We'll see. We've got a couple of requests here. We've got Path and CVS. You've been writing them down?
Yes.
Fantastic. Awesome. We just keep them coming in. Obviously, put the requests in the comments box. We'd be happy to go through them. And it opens us up, to kind of more stocks, more trade ideas. We had quite a good few ones last week, so let's have that again. Let's move on to the next stock, shall we?
Yep.
Whoops. Nope. There we go. NIO. Now, I've brought this up just a few times, I think, over the last couple of years. But we can see here on the chart, I'm looking for basically a break of this kind of wedge, really, and we're kind of seeing it now. But we do have a major kind of resistance point here of the 50 moving average. This is one I'm looking to be careful of. But if we can get above that, we do have a point of resistance here as well. But if we can get above that mainly, then I think it's about $5. I think it's that kind of level. If we get above that, I think we can have a little bit of a run, perhaps into the next earnings report, which is expected to be pretty good. Obviously, record deliveries the last the last 2 months actually, and it's looking good for this month of July as well. 3 consecutive months of 20,000 vehicle deliveries would be fantastic. Whether we hit 20,000 this month is yet to be determined, but it's looking pretty good so far. So the news is kind of going well for NIO. I know the cash burn is always going to be a problem. How long will they last? How many investments will they get from different areas of the world, actually? So that's always part of a question. And obviously, it's a Chinese-related stock, so it's not always the most favourable with US investors, which is understandable. But ultimately, the target here is 620 at the moment. Obviously, that's just a 200 moving average, but the longer time goes on, the longer this will kind of come down, probably $6, kind of 5.80, that kind of area. So my target is the 200 moving average. Where that is and how long that takes is yet to be determined, as I mentioned. But I like the price action currently breaking out of this wedge, but we need a couple more a good days or even just flat days to kind of see if we got a confirmation of the wedge break. What are your thoughts here for NIO? I know you like NIO every now and then.
So I think, as you said, I like NIO here and there, and I believe when it was below the $4 mark, I actually did take a trade. I took a couple leap options on NIO. And so for folks who don't know what leap options is, basically you're buying a call option that is very far out, and more than a year. So I'm definitely hoping that NIO has kind of stabilized at these levels, and we could see a breakout. So I'm definitely going to be following you, since you are the NIO resident expert in our group. I don't follow the delivery numbers or that, but watching how the stock has generally traded and listening to you and following you along the way, I think I'll take some chances on the NIO. But yeah, that's my take on the NIO. So I'll follow your lead on this one.
Awesome. Yeah, all you have to do is follow me on X for that, because I do consistently tweet about NIO, every now and then. And with that, obviously, you can find me on X. This is the handle. I'm fairly vocal on that around, obviously, as I mentioned, NIO. But my eToro public swing trading portfolio is on there quite a lot as well. And obviously just general chit chat around stocks, charts, etc. YouTube's been pretty quiet around here recently, but I'm looking to go live a lot more. I'm just thinking a bit more around the schedule there. But I'm looking to go out that kind of hard, if that makes any sense, more frequently, should we say. And obviously the Substack as well, which you can get me on. Writing on that a little bit more frequently now, which is exciting. Writing is not my forte, but I do like to kind of get it out in written format as well, because it helps me kind of focus on the process, etc. And with that, I'm going to hand you over to Kaye's charts. What do you got up first, Kaye?
Awesome, thank you. What is the first one here? Actually, I can't see my first
It's
chart.
Shopify.
Oh, it's Shopify. Yes. Okay, great. So Shopify has been. We haven't actually heard from Shopify in a while now, and if you notice, the stock has been trading below the 200-day moving average for a good chunk of time. I think they fell below right after the last earning, and the last whole 3 months pretty much has been, or 2 months pretty much has been below 200-day moving average. They finally came above that 50-day moving average. Now they are right around the 20-day moving average. So very interesting. And because I tend to sell options and that's my primary trading strategy, I like stocks that are range bound. So this is a nice range where you can sell your cash secured puts and you can kind of just rotate the money in if you're doing a wheel strategy. Now for the upcoming week, which is the 7/19 expiration, if you are into options trading, currently we have a 0.39 put to call ratio. So seems like there's a lot more bullish momentum building with this stock that could see a breakout. Now again, I don't see the breakout really happening until we come to the earnings report, unless something really gets announced. But this is something to be on the watch list for me. At least I'm currently in the trade with that, because anything which is range bound, I just tend to be in trade. So I've been having a decent amount of trades for Shopify from the last, I guess, 3-4 weeks now. Every single week I run option strategy on this one. But if you are looking for the trading, you can see from the gap ups that we have, sorry, the gap down that we had between the last earning and right now. Next earning report, if it comes out well, I see that gap filling out. But again, the 200-day moving average is going to remain as a ceiling until we see a catalyst.
Yeah, I think if you get that gap up over the 200 moving average, that'd be quite nice to see as well. But likewise, if we get a gap down, it could be quite, traumatic really for the next kind of 6 to 9 months of the stock potentially. But yeah, you mentioned the 200 moving average kind of sliding through there. You like to buy stocks underneath the 200 moving average
Correct.
for the long term.
Because Yeah, because this is also my long-term investment. So if from an investing standpoint, if the stock is trading at the lower end of the 52-week high and low, I tend to add to my position
Mm.
from an investing standpoint. But from a trading standpoint, again, as long as it's in a range, it works well in doing wheel strategy. If there's too much gap ups, too much gap downs, that's not very good for the option strategy that I'm using. But again, if you're scalping or if you're doing day trading, that will be a completely different chart pattern that you will apply these strategies for.
Exactly. Just looking at the chart, at least from my perspective, I mean, you've got the range bound activity here. It'd just be a case of waiting for that kind of breakout and a possible retest in the upwards direction or even the downwards direction. Um, just very simply, plain and simple there for me. RSI looking pretty good right in the middle, like almost exactly at 50, which is nice to see. But it also it brings up the opportunity of it can go either way.
Exactly.
So it's a tricky one. Not one I'd be adding to my watch list just yet. Not my main watch list. It's always on my kind of overall watch list, of course.
Extended watch list, yeah.
Yeah.
Because you can see, like, whenever stocks are range bound, you see the volume builds in the middle, and
Yeah.
you can see that is a big. There are a lot of the volume shelf between that range. Is just this like ping pong happening at
Mm.
those levels.
Yeah. Whoops. And yeah, I typically wait for kind of the
Oh,
break
you went to
middle
the next
upside.
chart. You moved to the next. Oh,
No, I'll move back. It's okay.
okay, cool,
It's all
cool.
right. Don't
Yeah.
worry. I'm on it. Don't worry. Yeah. So yeah, Shopify. It's an interesting one. But waiting for that kind of range to break is what I've been looking for.
Yeah, I think the next earnings report is going to be the deciding factor where we'll get the direction. So with that said, let's move to the next one.
There we go.
This one, I would say, it's on the watch list. I don't plan any trade now. Zoom is one of those stocks that fell out of the favor after the pandemic was over, and it has just been sliding down. But if you notice, most of the SaaS companies, which is the software as a service companies, whether it's a CRM, Datadog, Path, all those companies the software companies have been seeing declines over the last year and a half because it's just been a tough environment. Now for 719 per se, we have a very bullish strategy, very bullish going into the next week with 0.49. Not as bullish as Shopify, but they're from an options activity standpoint. Now, interestingly, if you're looking to invest or if you're looking for a long-term swing trade on this one, you have to keep couple things in mind for Zoom. Number one is that there is a 99% net dollar retention growth. So what does that mean in simple terms is that the company is not having an organic growth. A good company will have 100+% of net dollar retention. So that is a very key number that if you're investing in SaaS companies, that's the key number that you need to look at. And but on the opposite side, if you're buying a stock at this price from a long-term investing standpoint or swing trade, you're buying at a PE of 11, which is relatively much cheaper. But again, you have to be careful with Zoom. It definitely has fell off from the grace of investors or traders, and it's not as popular or is not as traded as it used to be. Um, but again, this is on my watch list. I'm not taking any trades. I'm not recommending any trades on this one. But just watching how the stock performs, and we'll see how the next earning comes out. I will be actually doing either the earnings report live, or I would be actually providing my thoughts on Zoom as we go through the next earnings.
Awesome. Yeah. I think just looking at the chart here, I'm just going to try and switch the view here so we can kind of see the RSI. The RSI down here looks a bit more of a divergence kind of going on here. So you've got the lower RSI here with the higher point. I wish I could kind of draw on it, but I can't quite. And you've got the price action, which is around, I'll look over here, 56.50, and then this one looks slightly lower. I know it's only slightly lower, but it's a possible kind of RSI divergence there. But that also coupled with a possible double bottom as well. Let's go back to our normal screen. So there's that to look forward to. Possible double bottom just from a technical basis, but we do have a lot of resistance in the way. We've got all
Exactly.
three moving averages, and we've got that trend line as well. And obviously, depending on where you're looking, you've got lots of resistance, actual levels in the way as well. So plenty to look forward to if it does take off. But yeah, like you say, one of those that's kind of one to watch, basically.
Yeah.
Awesome. Where can we find you? Oh.
You can find me on X as well. I do post on X throughout the week. On the YouTube front as well, I am actually working on a couple new ideas on YouTube, so that will be coming out in the next month or so. So for now, if you have any specific requests where you want me to work on any specific stock analysis, let me know. I'll cover those. But mostly as the earning season kicks off, you will see a lot more activity on the YouTube channel, and I would be writing couple earnings post earnings feedback of post earnings comments on Substack, so you can follow me there as well.
Yeah, I must say your earnings coverage is pretty up there on YouTube and X as well. The way you kind of easily break things down from the earnings call, I definitely I rate that highly for sure.
Awesome, thank you, appreciate that
No
comment,
problem.
Sean. All right, so we only have two requests uh for this. So if there are other requests that you have, drop it in the comment, but we will kick it off with Path.
Yeah, let me just get the chart sorted out so I can get them up ready to go.
Awesome. So in the meantime, if you have more requests, make sure you just drop it in the comments and we'll cover them. And if there are none, then we will make this a short session then.
Yeah, everyone's just waking up, I think, in America, aren't they?
Yes,
So
yes, exactly.
there's a few shocking events last night, so that's understandable. So what have we got here? We've got Path here. UA Path, they're AI play, aren't they? Around kind of.
Exactly. So let me actually open my chart as well on my side. So we saw a massive drop. So Path was trading around the $22 range for a majority of the time. We got the earnings report, and then we saw this massive gap down. And most of the gap down that has happened, if you want to know why it happened, you can check out my Substack. I did do a write up on that as well. Oh, we got a couple more requests. But bottom line right now is, for most of the SaaS companies that are currently reporting earnings, the biggest problem for general SaaS companies is the longer sales cycle. And why that is happening is because enterprise companies who buy these softwares are being very prudent with their spending. That has to do with the economy, the interest rate, and everything. So as we start to see changes over there and companies get a little bit more comfortable, you will start to see those SaaS companies performing better, because we had been talking about Datadog, we had been talking about Snow, we had been talking about CRM, Adobe. Every single stock is suffering along with Path as well. So for me right now in the Path, if it's something that you have for long term investment, I would dollar cost average at these level, because we had this gap down. But you're not out of the woods yet, because the next earning report, we want to see if Path has solved those problems that they reported, because their future outlook is still bleak for this year. And so we
Yeah,
could see another drop in Path. But if that happens, I'll be actually adding more to my long term position. But at these levels, I'm being very judicious in adding to the long term position. And I will not take any trades right now. This is more like a long term run for me, investment for me, than a trade.
awesome. Yeah, so I previously had a wedge drawn here, as you saw on the screen when I brought it up. I've just extended that down here, so I've got a bit of resistance around here, just from a technical point of view. Um, Obviously, great information on the fundamental side. Obviously, everyone really appreciates that. And I've actually got a line drawn here around that kind of 1264,
Mhm.
1263 level. And that seems to be kind of playing in and around that area, which is nice to see. Nice to see that an actual support level was holding up so far. So, perhaps that might be a support. If you wanted to enter a trade here, just potentially, me, I like to play more kind of shorter term trades. You could actually enter a trade here, or even just wait for a break of this 1320 level. Obviously, stop loss kind of around here, or even just bring it up slightly if you can see it on the screen, and just play it towards either the top of the wedge or the 50 minute average, depending on what your risk levels are like, etc. Just bring up the stop loss just behind it. That's a possible way of doing it. Or obviously, you can just sit on your hands and wait for a break of the upside of the wedge, or obviously a break of the downside of this support zone. So that's plenty to look for in terms of path.
Mm. Next up is
Looking here,
CVS.
CVS. Okay, I see that iSwagger has brought up 6 tickers.
Yep,
Yep,
I got all of them. We'll touch upon
keep
them.
us going.
Yep.
Thank you for AVGO and her, yeah, for these 2 tickers. Fantastic. Right. So CVS, what is this? This is healthcare. Is that right?
This is a pharmaceutical, and they basically have pharmacies all around US. So it's a very popular, I would say, pharmacy chain. What would be the equivalent in London, Sean?
Probably like Boots or something.
Yes, so exactly like Boots.
Yeah, Boots or that's the
So
only one that comes to mind.
I don't track CVS, but while you take a look at that, let me pull up the earnings and see what's
Yeah.
going on.
For some reason, think I have looked at this before. So I've got a pink line kind of running through here. Let's go out and zoom out on the weekly, see what that actually references. Oh, it's just a trend line. So it looks like it's kind of just breaking straight down from that. So we'll just go ahead and get rid of that. Don't need that just now. We'll jump back into the daily. Let's take a look. So I've drawn a bit of a trend line here, but it's not the most solid because I've only got 2 touches. But the reason I brought it up is because I'll just zoom in so you can see is that if we could break these 2 moving averages and this trend line cleanly, maybe somewhere around $60, and hold that level for a couple of days, then you could actually look at a move back to the kind of 200 moving average, or even just the gap fill, which I know you were about to say. I can tell you were about to say
Mm.
that. So, I mean, again, you could actually also wait for a break of this 61 level to 66. But that's not as sexy trade as kind of getting it in here, is it? Potentially.
Yeah,
So if you
this
can
is
see
a
that.
this is a dividend play, honestly. And the last earnings, which was on 5/1, they missed both on the EPS and they missed both and revenue as well. And that has been the first miss in revenue and EPS since 2019 June. So that was definitely a major event, and that's why probably we saw this massive gap down. We do have 21 down revisions for their upcoming quarterly earning, which is going to be bringing in about $91 billion as opposed to $88 billion in the last earnings report. So slightly better. But I think for most of the Wall Street that we are seeing, this is kind of like a hold pattern.
Mm,
Uh, so not the I wouldn't trade this stock, but this because this is mostly a dividend play.
yeah, okay.
And even on the let me just see the put to call. I think there's not much volume on trading. Maybe I might be wrong, but let me just double check. Um, I
I know
mean,
some people like to trade
yeah,
dividend stocks
they have
because of the.
they have decent volume. So I take it back. They have decent volume. Um, you could run options trade on this one.
I think
Not
people
that
like the slower moves, don't they? Like the slower
Yeah,
percentage gains, so they can get more out of it, especially in the swing trading performance.
exactly. Okay, let's move to the next one. Next one is do you want to cover Tesla and Amazon first, and then we will cover the other one, which is the
Yeah, let's do that.
okay.
Tesla had a bit of a drawdown this week, didn't it?
Yeah.
Related to the robo-taxi news, it's been delayed by what 3 months, is it? Which is
I
not
think
not a
so.
long
Yeah,
time really.
2 months. 2 months.
So let's zoom out a bit on this one. Go to the weekly, a bit more perspective. So we can see obviously a massive wedge break so far since September of 2022. Wow, yeah, that's quite a break. We've got a bit of resistance around here of 260. I actually did take some profits on there. Um, I know people won't agree with me on that, but that's just who I am. I take profits at kind of higher resistance levels, and so far it's worked out nicely. But I fully expect Tesla to kind of rocket through this because that's just kind of what it does. Obviously, that's not financial advice, but you know what Tesla's like. Okay, it can move.
Yeah. No, I think from a profit taking standpoint, again, you're trading it. This is we are not talking about investing and selling your stock. So if you're in the trade, you have your profit levels defined, and the this that's a good risk management, right? Nobody got poorer by taking profit. Yes, you may miss opportunity, but then when the time comes when the stock goes in the other direction for you, if you're trading and you don't have a good risk management, you will suffer in the long term. So
So just got a comment from I Swagger saying Tesla inverse head and shoulders, and this is probably what he's referring to. This particular pattern on the screen now. So that'd be interesting to see. If we can come back down, maybe retreat. Yeah, I mean probably more of a support line around 222, I would say, and then a move higher, obviously, to kind of towards 300 ish. That's kind of probably what he's referring to there.
I wouldn't be surprised once they report earnings, and
Mm.
you could see that drop down, the drawdown, and then when the October event starts to come closer, they will again the hype will build up for it. So again, you wouldn't be surprised if it actually trades in this range until we see the earnings, there's some drawdown, and then again the hype builds up for the October event.
Do you think there'll be drawdown for the earnings then? Because they did get
It could
record
be
deliveries.
because the problem was that the you had two events back to back. You had the earnings coming in, and then you had the 8/8 event. So a lot of focus was on the 8/8 because people were had written off the earnings anyways. It wouldn't be a main catalyst. But at this point in time, suddenly that becomes the main catalyst now because the 8/8 event got pushed out. Again, that's one of the narratives out there. Nobody knows. Everybody is speculating along with us. So we'll see how that plays out.
Exactly. Always one to watch for Tesla. What's
Okay,
next?
next is
Amazon.
Amazon.
Amazon, I'm actively trading this one as well. I almost brought it up as one of my selections. So I'm glad someone mentioned this one. Obviously, much appreciated. I Swagger. I'm sorry if I'm saying that wrong, but I'm just reading what I'm seeing on the screen. But we can see a couple of lines here that I've drawn on the screen already. So 188 obviously being the main resistance. Obviously, looking into the future, that could be potential support. If we do get a drawdown in SPY and QQQ, we could actually just see this blue line completely break, which is currently at 193. So we could actually just see that, obviously, like I just mentioned, completely break. And then we've got lots of confidence around here. I would expect it to kind of pick up, and the buyers coming around this area. So obviously you've got the 50 moving average, you've got the support resistance line there, and the trend line there as well. Let me just add the volume profile, see if that brings up anything. And yeah, you've got a bit of volume there as well. So it's a bit of a shelf to bounce off of. So technically, it could be 4 points of confluence, and the more the better. What are you thinking here, Kay?
So I actually drew a channel, a trend channel, and for me, honestly, I'm looking for a much bigger pullback around the
Really?
183. That's where I will be actually interested in adding more to Amazon. Um, and Because we have had some massive run. So if you draw this trend channel, we are still around in the upper half or upper one third of that trend channel. I drew the trend channel from all the way from April.
Oh wow, yeah.
Yeah. So just
So
from a long
April
term
was here,
standpoint,
wasn't it?
because I trade it, of course, on a weekly basis, but I also invest on it. So for me personally, to add more to my position, I'm looking for a much bigger pullback, closer to the bottom of the trend channel. In my case,
So you're talking something like this.
something like that, exactly. So 183 is where the biggest volume shelf is. So that's where I would like if it's somewhere around that range. That's when I'll start to add to my long term position. I know it's like looking a little bit of a hodgepodge here, but that's what I'm focusing on.
That's the great thing about the show. We have lots of different perspectives, and it's important to take them all in. Sometimes people just think, oh, the stock's just going to go straight up, but other people think, oh, it's going to go down. So it's important to kind of take in all these different perspectives and then come up with your own ideas, whether you want to trade or not. It's simple as that, really, isn't it?
Yeah, exactly.
Yeah, awesome.
Awesome.
What have we got next on
Next
the
is
list?
SMCI.
Well, I remember this one
Yeah.
doing very well recently. Well, not recently. Oh, look at this! I've got a trend. I can never say it properly, but it's a fib extension. I was going to say
Yes.
that. I could never say that word ever. But yeah, we can see obviously lots of different levels around here, and that's what I originally drew it from. Don't know how many months ago that was, but then we really accelerated, and it's kind of respected it in a way. Um, so we can see big resistance here around the, I don't even know what you'd even call that, 3,600 line. Basically, it's following the lines at the moment. So we want to see if it can break through this particular line around 910 ish. Well, it's a tricky one. Do you trade this stock, Kay? Because I don't really, to be honest.
No, I don't trade SMCI. I'm mostly sticking with Nvidia and AMD and
Yeah.
Intel. Is because I just follow those stocks a little bit more closely than SMCI. But for me, if let's say if you are looking for trading this, I the volume shelf around 860 and 9012 is pretty big, I would say. And if you see the candles in the last 1, 2, 3, 5 trading days, we are seeing some kind of a topping or a resistance at 912, and it's not been able to break that. But similarly, we have actually a support at 884 on the fib level. If I draw the smaller time frame fib level, and then you do have a decent volume shelf all the way between 863 going to 909. So that's where most of the volume is coming in. And then again,
Yeah.
950 is going to be a resistance for the short term at least, until I guess the next earnings report that pops up, which will be, let me see.
So we've got news by iSwagger here. SMCI just got news added to the Nasdaq on Friday after close.
Oh, this last Friday. Oh,
Yeah,
massive. Wow.
so that's very good news. So we probably, if it's after the close, we might see this pop after hours. I didn't see the actual numbers after hours, but we'll probably see it in the pre-market tomorrow, won't we? So we might actually break out of this wedge, and then I mean, we saw what happened last time. I don't think it's big enough news for this move, but you just never know with these stocks, I guess.
Yeah.
So
And the
if you're
next
in it, then congratulations.
exactly. And the next earnings is on 8/8, so which is what, 3 weeks from now?
Yeah, eight big day for two different stocks.
Exactly. Okay. Next up is AVGO.
AVGO. I'll let you start with this one, okay? Because this is a bit more of your ballpark,
Okay,
isn't it?
sure. So let me see if I have anything drawn on AVGO. I wonder where is the split coming up? I thought the split was announced. I don't remember when
I
this.
thought it at the beginning of August, like the 1st of August, I think, 4th of August.
Probably a split coming also for SMCI. Yeah, most likely. I think if the split for SMCI is announced, you'll see another massive run up,
I hear you.
just like you see for most stocks, and then eventually, oh, the split is on
Tomorrow,
10/1
tomorrow.
tomorrow.
No, yeah. So if you actually, it's behind us, so you can't see it, but it's behind us. But it's Monday, 15th of July.
Oh, so
Yeah,
tomorrow. Okay, so a lot of people will be shocked tomorrow when their stock price will be down in their portfolio.
there you go. You can see it now.
Okay, yeah, thanks. You know what? I'll wait for the split to take place, and just like with Nvidia, how we saw, we could see some kind of a consolidation again. See if there will be more gaps between the 1,500 all the way going to the 1,600 $1,600. So those gaps, as we talked about on the Nvidia stock split, those gaps do get filled at some point in time. So you can target those entry points, or you can wait for a pullback. But I wouldn't chase at this point in time, whether it's AVG or SMCI, if you have these split events announced. If you were not there already, if you're there, then that's great. You can take advantage.
Yeah,
But I wouldn't chase these stocks. Wait for the opportunity. It will come.
yeah. And if we do get that break downwards, perhaps potentially that this is a nice level. So you've got a gap fill there, as you mentioned, coupled with the 50 moving average, and we've said it millions of times before on this channel. Confluence is key.
Also, if you are selling options, again, the different trading methodologies, right? So if you're selling options, it will also become much cheaper, because I don't know if it's a 10-to-1 split, or more than that, but assuming it's a 10-to-1 split, it'll be what, $184 versus we're putting a lot of money right now, 184,000, I guess. Yeah.
Hmm. Interesting. Just want to
Or is
say
it?
good afternoon to Sebastian. He's here pretty much every week. So hello,
Yeah,
Sebastian.
Sebastian.
Hope
Sebastian
you've
is
had a
saying
good
it's
week.
1507. Oh yeah,
It's
so
tomorrow,
yeah,
isn't
the
it?
split is tomorrow. Yeah,
Tomorrow.
exactly.
Awesome. Have you got any more stocks? I can't remember
Yeah,
what
yeah,
they
yeah.
were.
Sorry.
Yeah,
Yeah, yeah. We actually have a lot more. So we have next is UHG. It's a United Health Group. It's an insurance company. This is
UAG.
also, yeah. It's one of the. It's actually UGH or UHG. Is it UGH or
Oh,
UHG?
UNH. UNH. United Health Group. Here we go. I've got it.
Okay, got it. Okay. So UNH, this is the, I think, a $500 billion company or something like that. Let me see.
The dividend stock. I can see the D's down the bottom here.
Yes, it is a
So
dividend.
similar to CVS, maybe.
It's a healthcare insurance company. So in US, everybody has to have a health insurance. They are a pretty big provider. There are other companies. It's a massive. It's a $470 billion company. Their dividend rate is pretty good, actually, $8.40 for forward. I'm pretty sure the dividend channels will do a much better job in talking about this stock. But it has a good, strong buy rating from the analyst, whether you're looking at the normal analyst or looking at Wall Street. Both have very good ratings on this one. Earning is coming up. Actually, earning is coming up on 7/16 next week.
Oh, next week is it? Hmm.
Yeah.
Some good candles here. On the monthly, there's a bit of a bounce off of the 50 moving average. This is the weekly that we're looking at now, and you can see a big bounce off the 200 moving average here. And we've got a bit of a, I can't remember what you call it, but I call it like a candle sandwich. I know it's not the official term, but you can see obviously the price went up and then it shot back down, but it came straight back up. So it's a little bit of a tug of war basically going on with the stock. But if you have the candle in the middle, whether it's green, red, whatever, that's the one that's kind of losing out. If that makes sense. So we've got two. We've got a green one here, a red one, and a green one. So you'd expect the price action to basically go higher. If someone could tell me what this is actually called in the comments, that would be great because I just called it a candle sandwich. So it's not the most official term in the world. But
Is
yeah,
that a weekly or is that a?
this is a weekly chart, yeah.
Let me see.
Even, I mean, once we get through this level here, the 50 moving average on the weekly, even on the daily, you've got the 200 coming straight through the middle there. So I know you've spoken about the 200 quite a lot. So it's one to look out for, I think, to kind of bounce off of it. But then, like you say, is there much volume in these stocks because they're dividend stocks, because they're healthcare stocks?
I can check.
You
Give
just
me
don't
one
know, do
second.
you? So,
I'm gonna check that.
you personally, to people in general.
This definitely has on. Actually, it does.
Oh,
Like
really?
a
Okay.
51,000 call
So,
open interest, so it's pretty solid for next week actually. 0.63 on the put to call ratio, and the IV if you're trading options is 47. So you definitely will get good premiums, and you probably will have to pay a decent amount. And of course, the IV is high because it's a earnings week.
So I think with this one, for me personally, I've been waiting for earnings, see what happens, and then see where the price action is, and go from there.
I would yeah. I generally don't trade these stocks on earnings.
No, neither do I, to be honest with you.
Okay, moving on to the
But
next one. Another dividend stock is called ULTA.
so yeah,
ULTA. This is
dividend. I don't think it's dividend.
I have a story about ULTA. Actually, my cousin works for this company, so she is a big ULTA fan. Um, I never bought this stock, but it's one of those very um, solid companies in dividend world.
Yeah. No, I don't think we have. Well, we might have it over here, but I guess I'm just not associated with it too much more. Um, but yeah, I don't really know about this company too much. I've drawn some lines on the chart, which I've all deleted now, but I see this gap already. Have you got any initial thoughts for this one? At least I know the story.
The initial thoughts on this one, it's they're reporting earnings next month, 8/29, so end of August. And interestingly, they have a down revision. We have 26 down revisions on this company. So I don't know why we have that because I don't follow the stock either. So don't have that much. But I think it's mostly due to the valuation of the company. And for folks who maybe follow the stock, if you can tell us, how was the earnings last? Was it like a poor guidance? Um, but in that case, I would definitely, valuation, it gets a C on Seeking Alpha, which means that it's definitely not the favorite, especially with the run up in stock price. uh, Not something I would trade. I would wait, I guess,
No.
unless, yeah, for the
I think
earnings.
the earnings, the last two quarters seems to be a bit of a beat, pretty successful, but maybe the earnings, not the earnings, the guidance, like you said, probably just not quite what investors were expecting,
Yeah,
perhaps.
that could be the case because all I'm seeing, from even from a news standpoint, I don't see anything specific.
No, I
Alta
mean,
shares recovered despite warning of Q1 challenges spilling into financial Q24.
it's not even particularly good technically. I mean, you've got this gap fill up here, but you've got a lot in the way, and it's quite a large ride up to that area again. And like you say, if it has bad guidance and then it continues to have bad guidance, then it's probably not the trade
Yeah,
for
but
us. But
again, if you are an investor in
yeah,
Alta,
exactly.
then
Yeah.
this drawdown in the stock price helps you add to your position. And if you actually look back a little bit further, like not the last earnings, the earning prior and the earning prior, we saw these gap ups also. We saw the gap up, and then you saw that gap fill post the next earning. So
Yeah.
we could see a similar trend as long as they provide a good guidance. But again, as I'm looking at the as I go back in time and I look at every single earnings or most of the earnings, they have the gap ups and gap downs. So if you're going to trade this kind of a stock, you got to be very careful for the earnings, because you can get caught, especially if you're trading options. And with the theta decay and everything coming into the play, this could be a tough one to trade.
Exactly.
But yeah, I mean, if you're investor long term, 200 below moving average, I would start to dollar cost average.
Awesome. Ultra
Okay,
Beauty. Have we got any more on the list here?
let me make sure that I did not miss any. So we covered
We've got
AVGO,
O, OPTX. I think
OPTX. Okay, let's see what that
we'll
is.
do one more after this one if we've got it in the comments, and then I think we'll wrap it up because I've got to go watch a football match. So,
Yes,
wow,
absolutely.
look at this.
Oh, it's a penny stock.
Well, it is now. It was 8.50 about 15 days ago, 10, 15 days ago. Wow. I couldn't even begin to tell you what they even do.
So they manufacture and supply integrated optics and photonics components for biomedical, defense and security, consumer, industrial. Okay, very interesting. They are into electronic manufacturing services industry.
And they're not doing very well in terms of price action. We do actually have a potential bottom of a trend line here, which just judging by what we've got on the screen, looks like it could just break down below that. But it's always pretty tricky trading these stocks, in my opinion, Kay. I don't know if you trade many penny stocks, but my
No,
guess is you probably don't.
I don't. I have
Um,
stopped trading penny stocks. It's like see if in this particular stock, if you go back all the way to 2022, if you would get in at a $9, you would have a run up of what 1950 around the 2023,
yeah,
and then it's a downward trend from there onwards. See, a lot of penny stocks, especially with the biomedical sector, what ends up happening is that there's some kind of a patent that they are waiting for it, and then the stock zooms up 200, 300, 400%. But it also can go down because if it relies specifically on certain news. I tend to not trade penny stocks personally.
I mean, that exact scenario is probably what we've seen here, or something similar, because you've got a massive bar of volume, and then the following day it's just kind of back to normal. So
Yeah,
imagine if you shorted it somewhere up here, that'd be insane. Congratulations if you did do that. But
people are
yeah,
not even covering this stock, so yeah, who
no,
knows.
no, it's one of those, isn't it?
What was
Anyway,
the last one?
that I think that was the last one, so we haven't had one since that I could see. So I guess we'll just wrap it up here, Kay.
Yeah, anything you want to add on? Any other stock ticker that you have particularly you're watching?
No, I've been talking. We spoke about before stream. AMD kind of broke out of a wedge, didn't it, recently? In fact, let's just bring it up quickly now. Let's have a little look at AMD. Let's treat the viewers to AMD, shall we? You said you traded on this one a little bit as well. Is that
Correct,
right?
correct.
Yeah,
Yes. So I had a 175. Yeah, I had a 175 put on this one. I sold this 175 put, so that expired worthless. I collected my premium for the week, and we saw this massive breakout.
exactly. My entry point, as you can probably see on the screen here, I've got two different positions because I like to have one at a target price. I can't consolidate on this particular platform, so that's why I have two different positions. So I have one that hits a target price, and I kind of just let the other one run if it was to continue going in that direction, of course. So at the moment, this one is the target price around 199, just below 200, just below psychological level. The city entry point is just around here, just the break off the trend line. It's a little bit early, I think, in terms of entry point, but that's the kind of risk I took there. I thought the risk was kind of, in my favour, so to speak. So AMD is going pretty well, and I just kind of, my target is probably about 220. Previous, is it all time high around that area?
Yeah, almost that will be. Yeah,
Yeah, so that's we'll see how that works. Obviously, we've got earnings just around the corner as well. Whatever this date is here,
227 was the all-time high.
227. Well, yeah, quite a bit to go then. Just over 15, 20%, something like that.
Yeah,
But earnings on the 30th of July, so it's just around the corner as well for AMD. Exciting stuff.
good
All right,
stuff. All right.
we'll finish it there. Anything to add for the week ahead then, Kay? Got any
So
thoughts around what's happening?
Well, first of all, I want to definitely thank all the audience for all the ticket requests that we got. Thank you, Wolf, for providing the platform to host our live. So make sure you subscribe to Wolf, subscribe to the Trading Triangle YouTube channel. Definitely check out mine and Sean's YouTube channel and X. Follow us on X for all that trade ideas. And all I will say is, as the earnings season starts to pick up, if you are trading, just be a little bit more cautious. Watch the options activity if you trade options a little bit more carefully. See all the events that are happening around us, whether it's geopolitical, whether it's in the country itself or not, because those do impact. If you're into momentum trading, that does have some kind of an impact. And apart from that, have fun, enjoy, just don't be reckless. And that's all I'll say for the next week and the weeks following that. Sure.
I don't think you could have said it any better. Yeah, make sure you obviously subscribe to all of us. Obviously, definitely Wolf as well. He provides great content on Twitter, or well, X, should I say now. So yeah, go ahead and follow him. And obviously, our handles are on the screen, as you can see. But yeah, I think you covered it well. I think just manage your trades. Just be careful around events, like you said. There's plenty of events at the moment, so there's plenty of volatility, which is both, it's bad sometimes, but obviously it's very good as well because it can help work in your favor. So yeah, with that, we'll say goodbye for this week, and we'll be back next week at the normal time of 6 p.m. UK and 1 p.m. on the
Eastern.
East Coast.
Yes.
Yeah, perfect. Thank you, everyone, and we'll see you next week.